The term financial planner or financial advisor has been loosely used across North America and across the world for many years. And in this video, I want to help guide you in the right direction to picking the right financial advisor, the right financial planner, what the difference is, and how to help you make a better transition as you get closer to retirement, build wealth, and figure out how to spend your money going forward. Hi, my name's Adam. Welcome to the channel. Thank you for joining us. We do have a second channel that we launched a little while ago. In that channel, we cover more of the 20 to 45-year-old range of building wealth. How do you save? How do you allocate money better? How do you pay off debt? How do you make better choices to build wealth so that when you get closer to retirement, which is what this channel covers off, you'll be in a much better position. And today we want to cover off how do you pick a financial advisor or financial planner? And I think it's a very important piece because a lot of people have ditched their planner, and for good reason. And a lot more of you need to ditch your planner. But before you ditch your planner, you need to understand why you're ditching them, what the consequence is, and does it actually make sense? Like, is your advisor giving value to you? I follow a few other financial advisors on Twitter, and one just posted earlier today that, if your financial advisor only picks mutual funds or investments for you, they're not a financial planner, they're an investment advisor. And I think that's where a lot of the crossover has happened is, for most of you, your financial planner has basically been a mutual fund picker for you. It might be a bank or a financial institution, but they basically just pick mutual funds for you. And that's great, but it's kind of stopped there. And especially with the DIY world opening up, a lot of you can just pick your own mutual funds or just do low-cost ETFs and cut the advisor out altogether. But as we know, if you've been watching this channel for any amount of time, having an advisor either on a fee-for-service basis or ongoing can add a lot of value. And I think this comes back to, what are you looking for? And I think a lot of people get frustrated with their advisor doing very little to nothing for them. And so they go from over here of, getting a little bit of help, but paying a large fee, to over here of, I'm gonna just cut all my fees, go ETFs and keep it as cheap as possible, but not have help. And then there's this middle gap. And in this video, I want to kind of fill this gap or help you fill this gap and figure out which the best option is for you, because there are many different options on how to fill this gap. So let's cover that off. We've put together a full financial planning checklist, and we'll link that below as well. You can download that checklist. And we've basically broken it down to general requirements. So your financial planner should have general requirements, which is a CFP designation, which is a Certified Financial Planner designation. And that is really the top of the class. That is, they've done their education, they have continuing education ongoing and credits that they need to earn. They have a fiduciary duty to you as the client. This is what you should be looking for in your financial planner. Someone that's going to put a tax and estate and retirement and income plan together for you to get you moving in the right direction, whether you're 20, 30, 50, or 80. Within the list, there's also a recommendation that person should be someone you should be able to lean on when times are tough, when things change in your life. They know when you're retiring, and they're adjusting your plan, your income plan, your tax plan, talking to you about your investment strategy, all of that. It needs to be a fiduciary that you're leaning on to really help you out. Your financial advisor shouldn't be someone that's just picking stocks for you or mutual funds for you and providing no value. That's an investment advisor and doesn't fill that financial planner role that a lot of you think you're getting, and you're missing out. And again, that's why you jump ship. So our checklist breaks down kind of, young professionals, pre-retirees, and retirees. So again, download that below. But I want to cover off a bit of pre-retirees and a bit of retirees, because most of our viewers are in those two camps. With the pre-retirees, is your financial advisor talking to you about tax strategies as you get closer to retirement? Those last 5 to 10 years before retirement, that's your runway. That's the time that you can make those slight adjustments to A, save tax now, but B, put you in a better tax and income position as you head into retirement. A lot of you think retirement is just investing, saving, having an RSP and a TFSA and all these accounts. But really, those accounts have to come together at some point and provide an income for the rest of your life. When your employment income stops, that's when your retirement income starts. Have you built it in the right way? Is it tax efficient? Are you going to have enough money? Have you saved properly? There's a lot of things that go into this, and your financial planner should be helping you coordinate those things so they come together at the point when you retire and everything works really well together. Another pre-retirement checklist item would be, has your advisor talked to you about things you should be doing pre-retirement as far as spending goes, right? Typically, employment income is going to be a little bit higher than your retirement income. So if they talked about, either saving up for those bigger purchases in retirement, completing some of those big purchases pre-retirement, there's a lot of moving parts in the last 5 to 10 years of retirement and the first 5 years into retirement. So it's kind of a 10 to 15 year window where there's a big transition period and cash flow changes and needs change. You need to have that conversation with your financial planner to make sure that your plan actually lines up with that. Now, if you're retired or very close to retirement, then you want to make sure your financial planner is doing a full comprehensive plan. And it drives me crazy that I hear from so many of you that, my advisor at the bank or wherever you deal with, they told me I'm going to be okay. My plan is a verbal, hey Joe, you're going to be okay. That is not a financial plan. And if your financial planner is doing that, they're probably not a planner, they're an advisor, an investment advisor. And you need to make a change. You need to get a financial planner on your side and maybe ditch your investment advisor altogether or just bring in another professional. Now remember, your investment advisor is probably charging you for financial planning. So if they're not doing that, you need to reassess your situation and see where your money is going to. So your financial plan that your planner puts together for you should show you how much income, when you can retire. Look at government benefits like CPP and OS. When's the best time to take it? And there may be a better time to take it and a time that you actually take it, but you need to understand the benefits and consequences of each timeline. So again, CPP at 60, 65, 70 is a good example. There might be one that gives you more income, but there might be a psychological decision around taking it a bit earlier or something like that. But again, you need to know these numbers. You need to see the data. When you hit retirement, you should know what your average tax rate, what your marginal tax rate is, where your income comes from, how much tax you're going to pay dollar-wise versus how much tax is going to be withheld. And I've talked about this before, and this is a really important part, especially the first 1 or 2 years of retirement, in that you're used to collecting employment income. You get one paycheck, they take off the right amount of tax, and at tax time, it's pretty much a wash. But when you hit retirement, I promise you the first 1 to 2 years of retirement, the tax numbers are going to kind of be a bit wonky because you have multiple sources of income. Maybe you have, a RIF, a LIF, TFSA, non-reg, pension, CPP, OAS. There's a lot of things that can be coming in, and each income source treats itself individually. And it says, well, Joe only has this much income. So typically they're not taking off enough tax. Maybe if you're drawing a lot of money out of a RIF account, they're withholding much more than you need to pay. So you're going to get a tax refund. And again, it's not about paying too much tax or too little tax. We want to minimize the tax as much as possible. But A, we want to level it out. But B, the most important thing, especially those first 3 years, is knowing what you owe. If your plan shows, you owe $2,000 in tax, but withholding tax is much more, we're going to get a refund. But again, that plays into your cash flow, right? We plan for so much cash flow. So where are we getting that cash flow in the meantime? There's a lot of moving parts that you need to work through with your financial planner. My last comment on finding a financial planner, or as far as assessing your current financial planner, advisor, investment advisor, whatever you're dealing with, is what are you looking for on your side? So a lot of clients that we deal with are just looking for fee for service. They're a DIY investor, they enjoy the DIY process, but they need a plan. They need to take kind of their paper maps, put them into a GPS roadmap, and get direction going forward on tax, income, estate, all of that. And so that you want to look for a fee-for-service advisor. And our firm here, Parallel Wealth, we do offer fee-for-service planning. We'll put that link below as well. Basically, we grab your information and we map out the best strategy and best plan, go through it with you, and give you the tools to implement that plan. And again, you're hiring us for kind of a one-time plan. We can do updates down the road, of course, but that's a fee-for-service advisor. Now, there's some of you that are looking for more of an ongoing relationship. Adam, whether you're doing your own investing or not, maybe I need a little bit more help with investing. I want someone to be able to contact when I have questions. When the market drops, I need them to, talk me off the cliff. There's a lot of value in these things as well. And I've been doing this for almost 20 years. We've had some bad markets. And when we have those bad markets, a lot of people don't know what to do. They need to lean into their financial advisor, their financial planner. Make sure you have that fiduciary that you can lean on and trust to walk you off that cliff. So if that's you, then you want to find someone that has more of a relationship ongoing. And again, our office offers that. Many advisors do. But just make sure you understand, what does the person that you're paying and hiring, what is their job and what do they do? I think too many investment firms, too many financial planners, they take the investing side and the planning side and they try and do everything. And to be honest with you, they probably try and do everything because there's money to be made on both sides. But I can tell you firsthand, they're two very different jobs and they take a lot of people on both sides to make it work. And so for us at Parallel Wealth, our approach is we do financial planning. So we have a team of 8 people here and we do financial planning. That's all we do. If we have a client come to us and says, look, Adam, I need help on the financial planning side and also on the investing side, then we have investment firms that we recommend and refer to, but they take care of the investment piece and we take care of the planning piece. We'll then communicate with the investment firm to make sure the plan and the cash flow to the portfolio line up, but professional firm over here with a big team and professional firm over here with a big team, and the fee is typically much lower than many of you are paying at your bank for your mutual funds or whatever you're doing. So do your research, understand the options you have out there. And this video isn't out there trying to push our services. It's to understand or help you understand there's probably a better way. And there's other firms that operate similar to us out there, so we're not the only ones. But the trend is moving in this direction, and I think it will continue to trend in this direction to add more value for you, the client. And that's why we made this transition many years ago to say, look, we're not doing all the investing and everything else. We're doing financial retirement tax and estate planning. That is all we do, and that's all of our team does. And so if you find that your financial planner or advisor is trying to do everything under the sun, you might want to consider if they're the right fit for you and if there's a better option for you to bring in more professionals, more help, more expertise at possibly even a lower cost.